Welcome back. Still watching Business Morning. Well, Nigeria's macroeconomic indicators are on the rebound, and these are expected to remain stable in the new fiscal year. But a mix of heightening political risk, potential policy somersaults, and global vulnerabilities cast a shadow on the horizon. Let's get an outlook now from Michael Guremi, macroeconomist and fixed income analyst with Chapel Hill Denham. Great to have you. Good morning.
Yeah, good morning, Daddy. Thanks for having me.
Yeah, so considering, recent developments in the global market, what do you make of the, outturn of interest rates in the first quarter of the year?
Well, I like to think that it's very likely that interest rates will increase in the first quarter of the year. I mean, you look at the global markets; it's quite indicative that investors are bracing up for an hawkish monetary policy environment, and that is coming on the back of the fact that the entire global economy is quite recording a significant level of inflation, which defeats the previous previous belief that the inflation we're seeing is transitory. So based on that, most central banks are now on course to raise the level of interest rates. We've seen banks like the Bank of England, the Brazil Central Bank, and I think the Turkish central bank and Russia as well, all increasing rates in the last quarter of 2021, and we expect that coming into 2022, especially in the first quarter, the Fed is most likely going to hike rates. Another point to also note is that back here in Nigeria, the CBN had already expressed at the last MPC meeting that they are going to mimic whatever stand that the US Fed takes in terms of global monetary policy. And considering that the Fed has communicated that they will not be hiking rates, it's very clear that the CBN will most likely, if they don't hike the rates at the MPC meeting this month, it's going to be a very strong consideration for them by March when they reconvene again to meet. So safe to say that the outlook is quite a hawkish one.
Yeah, but for Nigeria now, we're at 11.5%. Double digits, quite high. Should we actually be looking at hiking rates at this point?
Absolutely. I mean, if you look at where we're coming from 12.5%. And let me state, for the record that, the CBN, was one of the first, central bank in sub-Saharan Africa to, slash interest rates. For over a year now, we had, interest rates, down, by 100%. If you compare it, to Ghana, for instance, it took, much longer before, the Bank of Ghana decided to slash their own interest rates, and which, they've even, reneged on by, hiking it back. So safe to say that, yes, we might be at 11.5%, just like you said, but the truth is the monetary policy accommodation has prevailed for so long. It has cost, the central bank quite a lot in terms of, lost interest income, to banks. And I think it's just about time for them to, move on.
All right. So do you see the economy recording, an upbeat growth in the first quarter of the year? And what factors do you think would contribute to that?
Fair question. I mean, truth is, so far so good. I think the Nigerian economy has recovered. I mean, in my opinion, we've had growth 5.01, 4.03 in the second and third quarter of the year. But, I think that what you're currently seeing in the policy space, and that's speaking to the fact that both in terms of monetary policy and fiscal policy, we're seeing some sort of slowdown in accommodation. That is definitely going to clip the level of growth we're going to see. My view is that growth in the first quarter of the year would most likely bring sub 4%. So anything between 3 to 4% will be my own best estimate. When you also look at some of the sectors that support the economy, telecoms, cement, and FMCGs, yes, we might would get quite a couple of supports from them. But the truth is that in terms of economic activities, we might expect not to see not so much, especially considering the fact that we do not have a base effect like we had in 2021. So I do think, yes, we might see some growth, but I don't expect it to be anything too explosive.
All right. So, with the Ministry of Finance expanding, the tax base in Nigeria, what do you make of, inflation in this quarter?
Uh, I think the first point would be to say that it's a year of taxes. Honestly, it's a year of
Oh,
taxes
yes.
for the Nigerian economy. Yeah, because the Ministry of Finance, through the Strategic Revenue Growth Initiative, it's really all out to ensure that we make more money. But in terms of the impact on taxes or on inflation rather, I think that the quarterly average inflation for the first quarter of the year most likely be at 14.95 compared to 17.32, which we had in 2021. And this simply speaks to the fact that, I mean, if you're basically looking at numbers, it's safe to say that inflation in the first quarter, average inflation in the first quarter will be much lower in 2022 than in 2021. But you have to understand that in 2021, we had quite a high level of inflation. But since April 2021, we've had inflation nosediving steadily, up until November. And so the view is that we will continue to see, this disinflation persist, even into possibly into the first 3 months of, the first quarter of 2022. But I think, in my opinion, I think that it is very indicative to say that we might see a stop in terms of the disinflation trend we're seeing by the end of the first quarter of the year. So I'll say that, yes, average inflation would still be somewhat lower in the first quarter of 2022 compared to 2021.
All right. Talking about inflation, we're expecting the one for the month of December. It'll be out this week. What are you expecting for that?
So here at Chapel Hill, our view is, inflation would most likely close out the year at 15.01%, which is, basically, sustained disinflation compared to, what we had in November. And, we base, our view on some factors playing out. The first is, in December, quite right, we see quite, elevated level of demand coming from consumers because it's a festive period. But then, we think that, a lot of, producers, will most likely draw down on existing inventories, to sort of, boost the level of supply in the market and to also cater for the upshoot, they must have recorded from the demand side. We also did not, see any major, price shock in terms of, significant hike in the prices of fuel, or electricity or any other, major utilities consumed, by Nigerians. And then also you also look at the fact that the harvest season, is basically rounding off, and it's quite interesting to admit that it's been a very good one for Nigeria as far as 2021 harvest season is concerned, because we did not record any severe level of flooding like we had in the past. And so you put both three factors together, you can place a bet and say that yes, the level of inflation in December, should be low, and that's why we are saying that it should come down at 15.01%.
All right, let's look at other matters now. See, the BDC has appealed to the CBN to tap, remittance flows. Does this mean the parallel market is up for less liquidity in the first quarter of 2022? And where do you think the rates will close at?
In the case of the BDC, I have to say that they are quite in a tight position right now. It's instructive to say that the CBN was a huge support to the BDCs while they were enjoying supply from them last year. But with the discontinuity of the sale of FX to BDCs, they found themselves struggling to get dollar flows to support their own activities. And I honestly do think that as long as the CBN is not going back on their stand in terms of now supplying to BDCs, I still think that liquidity will be very low in the first quarter of the year for them. In terms of what the outlook for rates will be, I think in the parallel market, both in the parallel and the I&E market, we might see a little bit of depreciation, but not anything too serious. So my view is that the parallel market could probably end the first quarter of the year anything between 570 and 580, And then in the I&E market, we can probably see rates, tending towards, 420 levels. And this is, this is based, on a couple of factors. Number one is the fact that, we'll definitely we'll definitely see pressures, still building up in both markets, both in the I&E and both in the parallel markets. It's also interesting to note that it's likely that the CBN will remain conservative in terms of FX supply to the market. If you check the trend in 2021, one of the puzzling things for us is that despite the fact that the CBN got about over $7 billion both from SDR and Eurobond to proceed, the supply to the market was quite very very low, right? And the signal we think that this would most likely continue to be the trend as far as the first quarter of 2022 is concerned. We might not see quite any significant level of supply from the CBN. And then another event to bear in mind is the fact that if the Fed go proceed with the rate hike, it's very likely that we might see some sort of FPI flowing out of the economy, and this will again put more pressure on the demand side on the dollar, which would definitely keep the naira depreciated in the first quarter of the year. And then again, even with the rate hike, it's important to also note that once rates goes higher, it's definitely that the dollar will bring stronger. The stronger dollar definitely means that the naira is definitely going to be weak. So both three events are simply indicative of the fact that yes, we might see some sort of depreciation in the first quarter of the year for our exchange rate, but not anything too significant.
All right, well, we'll be watching after that. But what should be the focus right now of fiscal policy?
Yeah, on fiscal policy, I like to think that the ball is now in the hands of the government. It's quite true, that the entire global monetary space is going to turn hawkish. And what that simply means is the contribution of monetary policy to economic growth is going to be a bit curtailed. And now it's the time to see the fiscal part of administration coming in to support economic growth. And so for me, I think what the government should begin to look at is to ensure that they spend more on capex in the first quarter of the year. Another key reason why they should do that is because it's a pre-election year. In the fourth quarter of the year, electoral activities is going to be beefed up, and that would definitely not be a time for the government to pay attention to spending so much. The whole attention will be on who will be fielded by the two major political parties in the country. And so I think in this first quarter of the year, it's best for the government to go ahead and make sure that they put out more capital expenditure, especially for key projects that are quite accretive to the Nigerian economy. So more funds should be spent on capex to provide the support that is needed for economic growth, considering that monetary policy is most likely going to turn hawkish, and that limits growth.
All right, we'll keep tracking all these indicators. That's Michael Ogura, our macroeconomist with Chapel Hill Dam. Thank you so much for coming on Business Morning.
Thank you very much, Nadia.